Okay traders, so this is just a follow-up video from the first Fibonacci levels video that I posted earlier on YouTube. So there's Fibonacci retracements, which was covered in the first video, and then there's Fibonacci extensions, which is basically from your Fibonacci levels working out where would be a suitable target. And price plays out. So if we start on euro dollar, and then I'll give you an example on here, and then maybe we'll go to a real-time trade which is yet to play out, and then you can monitor that and see how it reacts. But there's hundreds of thousands of examples of Fibonacci targets, but I like just to set them up on just the same Fibonacci retracement tool, and I'll show you how. So high here to the low, and then if we open this up, you can see here you've got my levels. So my target levels is here, which is it would actually be 1.618, and then another one here which is 1.272, which is it's your two targets, which is here. So basically your 1.2 and your 1.6. What we can see here, we've drawn it from the high, so the initial to the low to the retracement. So around this here, so around the 618 level here, which would be the minus 618 level, is when we're interested in the trade. You can see we're on the weekly here as well, so this would have taken weeks and weeks and weeks to play out, but you've got it here, high to the low, and then green here is the target. So this is the 0.2 and this is the 6. So as a general rule of thumb, if price breaks the low, which would be this is the low, then it's 9 times out of 10 it will hit the 2 Fibonacci extension. 4 times out of 10 it will hit the 6. So if you're playing it safe, or you want to take a percentage of your position off the table, I would say it's better to go to this one. Also, what you can do is, let's just say here was a key level. So again, you've got some sort of key level here. Then of course you're only going to target that key level, because there'd need to be a huge amount of momentum to break that key level. And in fact, what would probably happen is price would hit that level, then move up, gain up some strength, and then push down even lower. So it's worth just using these levels as a pinch of salt, but they do work out, and it gives you an idea in terms of zones as well where you should be targeting. So if we go to, I'm just trying to think, what would be a good example? Let's try Kiwi Swiss. Kiwi Swiss could work. You can see at the moment we're at 382. Let's just have a look at Kiwi CAD. Okay, cool. So Kiwi CAD is probably a little bit better. Give you a better example. So Kiwi CAD, we're on the weekly. I'm looking for price to come back to this downward sloping trend line just for a fifth touch. So what's basically happened at the moment, we've created a high and we're waiting for price to create a lower high before we can go, have another leg up. So this is 382, which is where I'm expecting price to get to. When we see a reaction of 382, that is when I'll go long, and my target is actually this trend line along with 1.2 on the Fibonacci extension, which is here. It could go to 1.6, but there's absolutely no sense targeting 1.6 because we've got a weekly level in the way, and we've got this downward sloping trend line. So basically, for that extra percent here, you're basically asking price to break through this level, this trend line in order to get to here and then reverse. It's just, in my eyes, it's just not worth holding the trade for that. So these levels are really important, and you'll see that they, when you start drawing them, it will line up with minor support. So we might see that here, we might see price come down and then react just at this level. It might not even touch this trend line and then come back down, but we know everything is a zone. There's no exact science to this. So I hope that helps, and if there are any questions, do just send me a message on Instagram, because I can do another follow-up video for this.